Over this past week, Bitcoin crashed to about 78K, wiping out billions of people in long positions. And Dante from Bitcoin Simply called this back in December of last year. And according to him, we may still have another buying opportunity sub 80K coming soon. Stay tuned. Tired of meme tokens that promise the moon but leave you holding the bag or just rug? It's time to flip the narrative. Flapjacks launched transparently with locked liquidity, token burns, and real-world utility like exclusive fitness perks. This stack is built to last. Forks divide, syrup binds. Join the stack at flapjacks.xyz. Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Bitcoin Simply Bitcoin with Dante Cook. This is somebody I've been watching over the past like 6 to 9 months. Again, they're pretty much a Bitcoin only type of channel, and it's good to help you capture narratives from others in the space, like I always tell you, especially surrounding Bitcoin, so that you don't get shaken out like a lot of people did in this previous 8-day short-term cycle. And we still have a lot of unknown macro factors happening with things heating up in the Ukraine, Russia, Europe area, and a lot of uncertainty how tariffs will play out. So there's still a lot of things that can cause more volatility. And I want to play a couple clips from Dante to give you guys some overview.
Okay, so on December 31st, I created a video titled Why Bitcoin Will Crash to 80K, and no one really listened, or they put really angry comments in the video. Well, why did I predict that back then? Well, because Bitcoin is really sensitive to global liquidity. In fact, it moves along with global liquidity 83% of the time. Bitcoin's price typically lags liquidity by about 70 days. But positive news for Bitcoiners, liquidity is on the rise. So by mid-April or early May, Bitcoin looks to rally towards all-time highs. You can stamp this and said that I said it here. This is a testament to this great chart put out by Joe Consorti, which continues to be right and right again. Our long-term thesis for Bitcoin hasn't changed because fiat currencies priced in Bitcoin are all going to zero.
Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise.
So that was him calling his Babe Ruth shot back in December. And I mentioned this to you guys as well with Raoul Pal and everything as well. So I was in the camp that if we could go higher, we wouldn't see sub 100K. So if we had a touch around the 120 to 130 range, I believe we wouldn't have wicked back down as much as we did. And historically, this is the 2016 to 2020 cycle. You see these 38, 38, 33, and then one sub 30 correction. That's 6 of them in that cycle. Then if we look at 2020 to 2024, that is, where did I have that? Here we go. You can look at this over here and you'll see there's a 19, 15, 25, 25, 18, 27. It's because we had double top. 43, that's a huge one. 19, 20. So if you were to average these out, 24, 27, 15 again, you average these out, you'll probably see that it's about 20 some odd percent. And oh, sorry, that's into the 2024. So all the way to stops right here. This is a double top that we had. And there is, so above 15%, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 plus 15%. And out of that 12, at least 8 or so are plus 20. But none of them broke over, well, except for this one. Only one broke over the 30% range. So my thesis coming from Raoul Pal again is that we may see less and less volatility. And that just makes sense logically because the asset is maturing. And by maturing, I mean that more savvy investors are getting in and bigger money is coming in. So with bigger money coming in, the price appreciates. When the price appreciates, it takes more to swing that price, and more are becoming long-term hodlers. So the people that are selling is less and less. So I would suspect, just theorizing, that maybe 20 to 25 might be the absolute worst that we will see the cycle. So we've seen a 22. That was last year in June, and we probably even forgot about that. So that was 22%. Then there was a 21 shortly thereafter in August. And then so far since the rally, we bounced off or broke through, I should say, that 70K range. We've only seen a 13 and a 20, this recent 20 that we had. So we haven't seen any real bad volatility, to be honest. So it's not as bad as it seems, but a few people can indeed affect the market and crash the charts. And that's what Dante talks about in this next clip. That's Joe Rogan.
But for now, today, we want to understand why Bitcoin is crashing and who is selling. On the whole, it's the new Bitcoiners and the short-term hodlers who are selling. In this great chart from Minger, you can see that 74% of the recent sales are coming from short-term holders, so people that have bought Bitcoin in the last month. This is confirmed when you do a deeper dive into the analytics as well. About 20% of the supply of short-term hodlers are in the profit, which means about 80% of all the Bitcoin bought by people who are just entering the market is in the red. And when you combine this with the massive inflows that we've seen from ETF purchasers, you see that it's probably the people that are just getting into the game, the institutions, the financial advisors who aren't ready and used to the volatility of Bitcoin, who are selling. When you go to the on-chain metrics, you notice that there is a large amount of purchases that have happened in Bitcoin that are between the 90K and 105K mark. You see this massive gap between 75K and 85K. This is the window of price discovery that we're in now, because most of the people that bought before then aren't selling. And this presents a great opportunity. Let's look back at this clip that Michael Saylor put out about a year ago from today.
So I want to highlight that because I could probably pull this up. I'm not sure if this is Dune or another chart, but this shows a similar chart to what I showed you guys here that you can pull up on. It's free on Binance. Maybe it's on TradingView. I'm sorry, on Coinbase as well. On TradingView, they want to charge for this, but you can see the amount of volume in the charts here, and how there's this gap, like you mentioned, 73 to 90K or so, which is represented by this gap down here. So there's 75 right there, and then all the way to 85. So 75 to 85, which is why that could potentially still get filled. Now, based on M2, like he said, and also what Raoul Pal said, we should be seeing a rally around May. Now, that could mean that prior to May, we could still go up and come back down. So you can literally go to a 95K Bitcoin price, 98K, and wick back down to 75, 77. So it's not impossible. Nobody wants to see it. And then you can also get to 100K and drop 25%. And that's well within the range of Bitcoin volatility. And you're right back at 75 as well. So I would not be surprised if that happened prior to M2. And I think whenever M2, it's already spiking up now, but by the same time, we should have some more certainty with what's going on with tariffs and what's going on with the Ukraine and Europe and all that stuff as well. So a lot of this uncertainty should come to a head by the middle of the year, which lines up with global M2 and again, countries like China and Japan and stuff like that having to roll their debt and needing a weaker dollar. So all of this is definitely lining up as previous cycles have, and that's why Raoul Pal has the everything code to go along with it. Let's listen to this clip from Michael Saylor. It's back last year, around this time last year actually, but the information he shares is relevant now because it was post halving. So take a listen.
Done rebalancing. The natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're writing it the other direction, and the protocol's working to everybody's benefit.
The fear and
So that is interesting to note. So I was wrong. It wasn't post-halving. It's like I said, right about this time last year. So it was pre-halving. And he was talking about by April, it would be 450. And that's where it's at now. So the available Bitcoin to be sold by the miners every day is 450 Bitcoin. Available Bitcoin on exchanges has continued to drop. According to CoinGlass, that amount now is at 2.2 million Bitcoin. So this is what can be traded. Now, of course, again, I mentioned this before, anyone can go into their long-term HODL wallet when Bitcoin gets attractive enough and be like, yeah, I'm going to shave off a few Satoshis. But the volatility that you're seeing, eventually this number will continue to trend downward. As you can see here, it was 2.7 million just about a year ago, and now we're at 2.2. And it looks like some came out of wallets and moved on to exchanges at this point, so it came up a little bit. But as this continues to scale this way and Bitcoin price continues to appreciate, there is just only so many Bitcoin that can be sold from the miners, and even the miners are not selling all 450 every single day. And you got so much buy pressure coming from the ETFs, the Michael Saylors, sovereign wealth funds, nation state adoption, all sorts of stuff. So like you said, there is no catalyst that can bring the price down permanently. It's just going to be temporary volatility.
To the show. The fear that we're seeing in the market right now is actually unprecedented. Not only is this the 7th highest, most bearish sentiment that we've seen of all time, it doesn't adequately represent the amount of drawdown that we've seen. We're seeing the most bearishness for the least amount of drawdown. We're only 3% off of all-time highs in the S&P 500, yet we're seeing the same amount of bearishness that we've seen during the great financial crisis in COVID. This presents opportunities for prudent investors. Like some famous investors said, you buy when there's blood on the streets. And that has proven to be true time and time again, because when you look at the data, when the market is typically this bearish, there's good returns 6, 9 months, and a year afterwards. And this is just the S&P 500. This analysis rings even more true for assets like Bitcoin. And people are so...
And we'll cap it there. And that is exactly right. And that's what I've started doing. So the fear and greed index has already come back up. We were at 21 in my previous video. And just because of the recent Trump news about what do you call it? The crypto strategic reserve, we have bounced back up. So we were sitting down here a week ago, and now all of a sudden it's like, oh, it's not so bad. So I do believe there's still going to be some uncertainty in the markets, but once we get above that 125 to 150k range, I don't think there's anything stopping Bitcoin at that stage. Like, there will be people that become some serious believers at that point. I believe even Peter Schiff has started calling Bitcoin digital gold. So everybody's slowly coming around, and even if you don't understand it, you're just like, I don't understand it, but I need to get a little piece of this because everybody else has a piece. So there will be a point where, 100k will look like an amazing buy opportunity, and this right here is reflecting how the market can change so dramatically. Like, I actually did my previous leverage strategy when we were sitting at that 80k, 78k range, because that is the opportunity. Buy when there's blood in the streets. When everyone else is fearful, that's when you're greedy. And especially with Bitcoin, I didn't do anything else with my alts. I didn't double down on any of those. Those are just sitting there. But I understand Bitcoin enough to see the buying opportunity, and I understand now risk enough to where I'm like, you know what, the hell with that. I'm gonna take out some leverage on this because I know how to play this much, much better than I did with shitcoins. And as I put in the last video from Charles Hoskins, if the federal bank or a central bank is pumping your bags, or the US government, then there is nothing else that can happen besides your bags go up. So just wanted to share that clip. Let me know what you guys think. Do you think we'll see another 80k range, or even back down to fill that gap at around 73 to 75? We didn't quite get there, and not a lot of volume. We didn't stay there that long. So there's still a gap right here at the 80 to 85 range untouched. So do you think we're going to come back down and touch that? Let me know your thoughts in the comment below, and smash that HBO special. Help brother out, like, subscribe, and lift daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.